So today I want to do something a little different. I'm going to take you on a personal journey, my journey. We're talking the highs, let's be honest, the many lows, and the really hard-won lessons of becoming a trader. This is my story of making all the classic mistakes, having those moments that just absolutely humble you, and then finally building a process that actually works. This quote is the perfect place to start because it hits the nail on the head. This is the heart of why so many new traders fail. And believe me, I fell right into this trap. I thought I knew what I was doing. I thought I had cracked the code. And that false confidence, man, that was the most dangerous thing I had. You know, every trader's story kind of starts in the same place. You open up an account, you watch a few videos, you place a couple of trades, and they win. And all of a sudden you think, wow, this is easy. Deceptively easy. You feel like you found this secret that nobody else knows about. Well, it turns out there's a name for this feeling. The Dunning-Kruger effect. And it perfectly describes that rookie phase where you have just enough knowledge to be dangerous, but not nearly enough to realize just how little you actually understand about the markets. It's the classic case of not knowing what you don't know. Oh man, this screen right here, this was my life. I was absolutely convinced that if I just added one more indicator, another moving average, maybe an oscillator, the perfect cocktail of MACD and RSI, I would find the Holy Grail. I was hunting for some magic formula that would just tell me when to buy and sell, no stress involved. But here's the hard truth I had to learn. And I learned it the hard way. There is no perfect indicator. It doesn't exist. See, most of them are lagging, which just means they're based on what has already happened. So this whole hunt becomes this vicious cycle that just distracts you from what really matters, which is learning to read price action right here, right now. Okay, so this next stage, this is where the real learning and, the real pain kicked in. I call it the great humbling. It was this slow, painful realization that successful trading has almost nothing to do with predicting the future and everything to do with conquering your own mind. These right here, these were my personal demons. Overconfidence, it had me risking way too much on trades I had no business being in. Loss aversion, it made me hold on to losing stocks just hoping they'd come back. And FOMO, the fear of missing out, that had me chasing stocks at the absolute worst times. Every single one of these is a mental trap just designed to empty your account. As a trader, you are constantly caught in a tug of war between these two emotions. Fear makes you panic sell at the exact bottom, or just freeze up on the perfect setup, and then greed makes you chase a stock that's already gone parabolic, or hold a winner for so long it turns back into a loser. They're polar opposites, but they are equally destructive. Seriously, think about this for a second. Have you ever felt that burning desire to prove you were right about a trade? Well, that's your ego talking. And in the market, your ego is the most expensive thing you own. It's what makes you add to a losing position, refusing to take a small loss, which of course then turns into a catastrophic one. Now, the humbling didn't just happen in my head. It was happening all over my charts. My psychological issues were just being magnified by some huge technical blind spots. I was looking at the market, sure, but I wasn't really seeing it. Oh, this was a huge one for me. I would just decide, okay, I'm bullish on this stock. And then I would stare at the chart until I made a pattern fit that story, Oh, look, that's a bull flag. Or hey, that's a cup and handle forming. I was seeing what I wanted to see, not what was actually there. Okay, here's my personal hall of shame. First, I'd get total tunnel vision on a 5-minute chart, thinking I found the perfect setup, while completely ignoring that the bigger daily trend was just screaming, go the other way. Then I'd trade these old support levels that had been tested over and over, not realizing they were getting weaker each time. And the worst one? Ignoring volume, the market's truth teller. A breakout on low volume is almost always a trap. And this really shows how even good tools can lead you down the wrong path. I used to treat indicators like a crystal ball, but they don't predict anything. A bullish signal means nothing if the stock is in a massive downtrend or if you're risking half your account on it. Context and risk management. They're absolutely everything. This is a lesson that cost me so much money. I'd see a price break above a key resistance level, and I would just dive in, full of FOMO, only to watch it slam right back down and stop me out. These are called false breakouts, and they are designed specifically to trap eager, impatient traders like I was. So after all the mistakes, all the humbling losses, I finally got it. Surviving in this game isn't about being some kind of genius who can predict the future. It's about forging armor. And that armor is a rock-solid, non-negotiable trading plan. Look, a trading plan isn't meant to guarantee every trade is a winner. That's impossible. Its real purpose is to give you a repeatable process to follow when you're in the heat of the moment, when fear and greed are screaming at you. It takes the emotional guesswork out of your decisions. And for me, it all boils down to these 4 questions. My plan has to answer every single one of them before I even think about clicking that buy button. How do I find the trade? What's my exact entry signal? How much am I willing to lose? And what's my exit plan for both a win and a loss? If you can't answer these, you're not trading. You're just gambling. This number right here, this changed everything for me. It's the golden rule. I made a promise to myself to never, ever risk more than 1% to 2% of my entire account on any single trade. It's the one rule that guarantees a string of losses, which is going to happen, won't wipe you out. It's what keeps you in the game long enough to actually succeed. And finally, this. The stop loss is not a suggestion. It is your ultimate safety net. It's the little machine that enforces your discipline when your ego wants to hold on for just a little bit longer. It is, without a doubt, the most important rule of all because it protects your capital, which is the one tool you absolutely cannot trade without. You know, looking back, I realize learning to trade was never really about learning the markets. It was about learning myself, my fears, my greed, my biases, my impatience. It's this incredible journey of self-discovery that's just disguised as a financial game. My story was forged by a lot of painful mistakes that led to hard-won discipline. So the real question is, what will your story be?